unfiltered opinions.
Sometimes you have ideas and you're not quite sure why.
As you secure the bag.
Sometimes you meet people and realize there's probably a reason why you stayed in touch.
Just listen.
Sometimes all the pieces just come together by themselves.
I'm Jimmy Moyaha.
And I'm Simon Brown.
Welcome to Insider Exchange.
Good morning. Welcome to yet another episode of Insider Exchange. Welcome to Market Matters, live streamed for your viewing pleasure every Monday morning or every Tuesday. We're starting to like Tuesdays a lot more. We might just throw things around. Today on the show, we're going to be taking a look at every single data point because all of them decided to come out in the same week. We're looking at the biggest week for earnings week in the US. We're looking at South African interest rates. We're looking at US personal consumption expenditure data. We're looking at US jobs data, everything in between. And then we're still going to look at other market matters. We're going to take a look at Steinhoff looking to sell off some of its other companies in the form of the Pepkor holding that they held. We're looking at the country of Botswana deciding that they want to potentially buy DeBeers. We'd been talking about who would be a potential suitor for that. And if we've got time, we'll see if we can take a look at LVMH deciding to offload Marc Jacobs. Before we get to all of that, we're back. We've got some really interesting revelations. Now, I thought about this and I realized that part of the problem that we were having with the names was that whoever was writing the names on the cups was a South African. And so if you're a South African and you've met a Nonkululeko, it's easier to spell Nonkululeko. So I thought, let's mix it up a bit. And I went from like easy, medium, hard to like impossible on the name scale. I thought, let's write some Irish names.
Oh, jeez.
Yes.
Is that why, actually that's Siobhan, what's that?
That's it. That is Siobhan, but spelt with a B. Now, I'm going to spell what's on my card, and Sai, I'd like you to guess how it's pronounced. CAOIMHE.
Corn.
Corn. No. Not corn. Are you ready for it?
Yeah.
Quiver. Yep. That's how it's pronounced. That's how it's spelled. CAOIMHE is pronounced Quiver if you're Irish. So perhaps we'll see if that can be a thing that we can do. We're going to keep finding Irish names. We've got a Tig behind the mic.
Can I just be Tandasizwe?
No, but that's the problem, right?
Easy.
That would be too easy for a South African to write down who knows how to spell the name. So the whole idea behind the challenge was to see if we could avoid or get things that have multiple spellings or complex spellings and all of that. But today, when I went and I gave these names, the lady that was writing the names on the cups didn't even bother. She didn't even bother trying. She was like, how do you spell it? She was like, I'm not going to attempt this. I'm not going to get it wrong. She was like, tell me what you want me to write on the cups. So, Irish names, seemingly the most complex. If there are more complex names out there, please let us know. Shout out to our TikTok community. Shout out to those that are joining us on stream. Morning, Tony. Yes. We're all fired up as well. It's just that there's so much data to get through. Incognito, good morning. You finally caught the live. Yes, it's been a while. You're always commenting and you're never actually catching the live. So we're happy. We're happy you're catching the live. We're happy you guys are here. Give us your name suggestions. Give us your thoughts around Quiver and Siobhan with a B. But yes, let's get into market matters because we have so much data to get into and very little time to see if we can cover all of it. Do we start with the announcements and then end off with the data? I suppose that makes more sense, right? Let's look at Ibex.
Yeah.
Ibex, formerly Steinhoff. Finally selling off the rest of its Pepkor holdings, around 28 billion rands worth. And that would be ordinarily not really an eventful situation. But the last time Ibex tried to sell off some Pepkor stake, it was around 6 billion rands worth, and they were able to sell off the stake. And the moment the money hit the bank account, the South African Reserve Bank was like, oh, wonderful, here's a preservation order. We're going to take the money. And Ibex then went and challenged that and said, we want our money back.
Yeah.
Seemingly, Ibex has now let go of that. So they've
But
said
they won a court case back earlier in the year.
yes, but now it seems that they're not going to challenge for that money anymore. The question for me then becomes, are you not doing that because you don't want them to seize the other 28 billion that's going to come through from the sale of Pepcor now? Or is there something more to that?
I mean, maybe they've like reached an agreement of sorts, which says, yeah, you keep that.
Yeah, you
we'll
keep the
take-
6 billion, we'll
yeah.
take the 28 billion.
Yeah, which seems, I mean, that seems fair in everyone. I mean, so Saab gets 20%,
Yeah.
Alex gets the other 80%. And
So effectively, they've forfeited the 6.3 billion rand to the Reserve Bank as a settlement of sorts, almost in an effort to say, please don't come after the other 28 billion. Now, I don't know if that's been included as a clause to say you will take the 6 billion, but then you will not come after the 28 billion. But the statement was released on Thursday saying that they'd reached a comprehensive settlement between the South African Reserve Bank and IBEX. So 6.3 billion gone, but you keep 28 billion from the new
it
sale.
does because it says in fulfilling these aims, 6.3 billion plus interest of IBEX group funds. So the interest is earned by Saab because Saab was sitting on the money.
But doesn't Saab...
Forfeited to the state in full and final settlement of Saab's enforcement action against IBEX.
So the central bank that issues the loans at an interest rate to commercial banks and that issues money to commercial banks and money into circulation is earning interest on the money that it's issued. Okay.
Yeah, they do. Central banking. You get to print the money, you get,
You get
to
to
set
earn
the
the
rate,
money,
and
you get to
earn the money.
you do whatever you want with the money. Well, to be fair, it is your money. Let's move on to DeBeers.
Yeah.
And the Botswana conglomerate. So Anglo owns DeBeers, but a huge part of that commercial relationship sits in Botswana. Botswana's biggest export to the world is diamonds from the Botswana business, which is the De Beers Botswana business. Now, we know that we spoke about this when Anglo was looking to unwind this. We looked at potential suitors. It is one of the previous episodes that we've had on the podcast. Dig into that. We broke down who we thought would be the potential suitors for Anglo at the time, or for De Beers rather at the time, to buy out De Beers from Anglo. It seems the Botswanan government wants to protect their interests here, and to the extent that they are considering themselves potentially buying this out.
Yeah, and so what? Botswana holds 15. I mean, we'll get to why do they want diamonds in a moment, but Botswana holds 15%. They have a sort of right of first refusal or some sort of deal. They've phrased it differently between Botswana and De Beers. They want to up that. They could, in theory, I mean, they can totally, and they can raise the money, right? Botswana is investment grade, not like us down here where we are.
They're not junk status.
Yeah, we are junk. So they could raise the money probably quite easily via some bonds. I don't think De Beers is going to get much for. Anglo is going to get very much for De Beers because, well, diamonds and lab-grown diamonds or microwave diamonds, whatever we call them. and the weird stuff is when you walk through the Diamond Mile in Sandton, like there are stores which have in their window lab-grown diamonds. Like they're not like. There's no like embarrassment anymore.
But it's not a taboo thing. It was never a taboo thing. It was always one of those, here's a cheaper alternative, initially I remember it being pitched as a more ethically sourced diamond, and you can almost achieve greater perfection with it. I think, in as much as I agree with the fact that they might not get much for it, the diamond market has really, really taken a nosedive since. I think they will still be in the luxury and ultra luxury space, and we spoke about this as well.
Yeah.
I think there will always still be that mark of saying, well, this is a real diamond, or this is
we will get
from the earth,
Yeah.
and not something that was made in a lab, But it's the same thing as to why you would have. And this is a weird example to use, but it's the same reason why you would have a natural pregnancy and an IVF pregnancy. Some would argue that an IVF baby is a test tube baby.
At the end of the day, are babies.
At the end of the day, they are both babies. They both come out as human beings. You know what I mean? So perhaps there will still be that market out there. Side note, Jimbo noticed that you got a haircut.
I did. Fairly aggressive one, but you know what? Hair grows, it's fine. So we had just quick side note. So I go and I get this at Sorbet upstairs or down the road here. I go into their website to see if I can book an appointment. Their first appointment is October. I'm not that compy, right? So I go to the place. They've got they cut my hair immediately. I say, do you realize your online booking says October? And they're like, what online booking? Anyway, so Botswana's problem is that their budget deficit is expected to get to 7.5% next year. So there's some squeeze in that regard. And then diamonds, hey? I mean, shouldn't they rather take that money and go and buy something that is... So there's a thing on Twitter this morning, they want to build a smart city. I don't know about that either, like a Dubai in the desert. But shouldn't they go and get something that's less cyclical, that's not diamonds? Why don't they buy... Tiger Brands? No, terrible idea. Why don't they buy Capitec? You know, buy something that's not so... And I appreciate the valuations are different, but buy something that is... less cyclical and less in a downtrend, because to be clear, diamonds, I mean, you know, are we going to see an increased usage? You know, is the percentage of real diamonds, earth-grown diamonds, what do we call them, going to increase over time or decrease? It's going to decrease. So why go into a decreasing industry? Why not take this money that you could spend and go and buy something that is not cyclical, like a sovereign wealth fund, but go and buy, you know, some ShopRite?
Because like Saudi Arabia, like the Middle East, the commodity itself is underneath your earth.
Yes.
It's there. It's not like you have to go and fly somewhere to go and import the diamonds. You just look down, pick one up, and you're like, oh, look, we can sell this.
And in places, actually more in Namibia, in places you literally can look down and pick one up. And
So for them, there's no... The input cost to acquire the diamonds and to mine the diamonds is far less than it would be for any other country on the planet, quite literally.
Yeah, no, fair point.
So-
It is, I suppose so. And diamonds is what they are and what they're known for and stuff like that. I just worry that a small little economy that really only has two things, and that's tourism and diamonds. And to be clear, the tourism part is... It's a little unique. You know, Okavango is amazing, but like it's not for everyone. As opposed to a beach or a nightlife or something. So yeah.
Jimbo wants to know how much Botswana would get for their stake in DeBeers as per the latest valuations. Let's have a look. Let's see.
So latest valuation of DeBeers, I think, was 10-ish billion, but that's been downgraded repeatedly.
Let's see. We're at about 4 billion, down from about 7 billion. There was a write-down in 2024 by Anglo, if you'll remember. I think that write-down was to the tune of almost $3 billion US. So there isn't much more left there, assuming that, even assuming that they own 50% of that is 2 billion.
It's down to, 4 billion, and it used to be 10-ish billion, and we're talking dollars here, ne?
Right, so...
Is this dollars? Yeah, this is
Yeah, US dollars. So there is the opportunity to acquire the stake at a discount, if you would consider that a discount. But then again, you have to then assume then that the diamond market will start to pick up and recover. I suppose you could find alternative use cases for it. But again, this is something we dipped into in a previous episode with the Anglo conversation. So dip into that conversation, folks, if you've missed that. We're going to move on to LVMH while we have time. They've decided they want to offload Marc Jacobs as a brand. That's interesting. The LVMH stable...
I thought this was a person.
I think it might have been named after a person. Ouch, indeed,
Just
James.
quick. It used to be, the De Beers valuation was 13 billion in 2010.
Ouch, indeed, James. James said ouch towards that when we gave the valuation figures. So, yeah, that's...
So what does Marc Jacobs do?
Hang on, before we get to that, Incognito said, why don't they expropriate without compensation? Nationalize all mines.
Actually, I'm with... hang on. I'm with Incognito. Yeah. Our diamonds. What is Anglo going to do?
They've done that. If you remember, just before the decision to sell at the moment, De Beers had... the Botswanan government had expressed severe discontent with the fact that the diamonds were mined out of Botswana.
By Botswanas.
They belonged to Botswana, and they were getting a small slice of the pie. Remember, there was a time where it was a 90-10 split, 90% going to Anglo, 10% coming to the Botswanan government. And the government said, we're not going to renew the contract. And it went on for months with them not renewing the permissions and the mining licenses. So they'd already started this whole, we want a more equitable share in this. And I remember at the time when that was happening, I sat there and I thought, well, South Africa does gold and platinum, and we rank amongst the top 3 producers for both of these metals around the world. Yet, again, the expropriation conversation is a bit of a weird one, right? So perhaps they'll do that. Perhaps they'll say to DeBeers and say, you know what, we're not going to renew your mining permit, and we're just going to let it lapse, let you walk out, and we'll reestablish whatever. So I know it's been an ongoing conversation, but we'll keep an eye on that and see how that shapes up. Back to LVMH, Marc Jacobs, who is potentially a person that the brand was named after. It's weird because...
Oak does everything. Bags, is it an Oak? Wallets, shoes.
Yes.
He even does heaven. Jewelry, ready to wear, accessories, fragrances. Dojo Cat.
So think Tom Ford, along the likes of Tom Ford, but I suppose with a bit more...
You and I messed up our lives.
We should have what? Become fashion designers?
Yeah, we could have a Jimmy Moyaha and a Simon Brown, although Simon Brown's a little... we could have a Brown Moyaha.
Okay. What would we do? What would we produce?
All of the stuff, man. How hard can it...
All of it.
I mean, he does backpacks. I want to see a backpack.
That's true. And they do put quite a hefty price tag on some of these things.
Whoa.
There you go.
$250. It is bright pink. $295, but that one's boring. It's denim. Yo.
Yeah, so Marc Jacobs is one of those brands within the LVMH stable that isn't a Louis Vuitton, but is also kind of part of what LVMH has done. They've bought up these smaller brands over time, right? LVMH has done it, Kering has done it, and that's why they're the big conglomerates. Richemont as well kind of sits in that space with the likes of Cartier and all of that under their stable. So the big luxury brands have smaller brands within, and sometimes your smaller brand might not perform as well, and so you're like, okay, cool, we're going to get rid of it, right? So that seems to be interesting. I don't know who then buys up a Marc Jacobs, because if an LVMH is getting rid of it, a Kering might not want it, a Richemont might not want it. You have those smaller sort of sports apparel brands, the likes of Adidas and all of that might have an interest to go into
that could be
semi-luxury or a little more premium.
Nike or something. So I thought maybe one of the luxury players, but I'm not sure about that. Private equity is all big and exciting. So deal valued about $1 billion. That's not so much. And it's quite small in LVMH's life, but so, I mean, who would? I mean, the Kering and the folks, surely they're not going to buy it.
Jumbo, while we're on this topic, says, just one lap cloth, market matters in terms of what we produce, right? The luxury brands that take care of you. We like it, Jumbo. We like it. We like it. Product ideas? What would you want? Would you want sunglasses? Would you want us to do tailored suits? What would you want? That's the big question. And again, the big question also for Marc Jacobs.
Christina?
Who's Christina?
Yeah.
Aguilera or the...
They have a Christina.
Oh, the Christina brand. Yes, it's another one of their brands.
I recognize these. And these are like cheap. Compared to those Birkins, these are like $350. So that bag you bought your lady, which was like, what was that? There was what was it?
Which one? The Chanel.
Was it a Chanel? No.
The Louis Vuitton.
Louis Vuitton, LV, that's right. These are cheap. $450.
Interestingly enough, back on that conversation, another side quest here.
Sorry, we're going nowhere but sideways.
We're moving forward, but sideways, but forward. The conversation that we had around those replica bags, there's another channel that's come up online and everything. People have been raving about that, where you can get the alternatives to the new brands and all of that. And they went directly after a particular brand. They went after Hermes, which Hermes was one of the only brands that came out at that time to say, guys, we know where all our stuff is made. We're the only luxury brand that can show you that our stuff is made in France, whereas everyone else was like, no, we're going to keep quiet and not debunk any of these claims. But yes, LVMH offloading Marc Jacobs. Some companies, and this is, I think the nexus of this is, some companies have decided to offload non-core assets, regardless of industry.
Sunglasses are ugly.
Again, non-core assets. See? Non-core assets.
Yeah, and it's small in LVMH's life. So at $1 billion, a private equity, I mean, that's petty cash for private equity, or Botswana. No, they could spend $2 billion buying DeBeers, or they could spend $1 billion buying Marc Jacobs.
Okay. And then what do they do with it?
Well, they'd like sell stuff. Like you just own it and then you sell it, and then they could do some desert themes and some rhino themes and things and hippos and. No, this would be okay. Back to the thing. I liked your idea about a Nike or an Adidas or one of those sort of people. I suspect that they wouldn't, because I'm not sure that there's much true synergies, and I hate that word. But I'm not sure. And we would say, it's all just clothing and stuff like that. It's not. One is very sport orientated and athleisure and all of that sort of thing. And this is fashion. I mean, this is
but then you don't buy it for synergies. You buy it for diversification.
Yeah, 100%.
Right? So you buy it specifically because you're in a concentrated market and you need to diversify out. If you're a Nike who potentially could be the largest in that sports space by market share, you can't just sit in one industry where you're already the dominant player and expect that everybody else will collapse at some point, right? You've already won that market. Perhaps go into a new market. Incognito says that a company called L. Carterton might buy it. I don't know L. Carterton.
No, can't even spell it.
L. Carterton is a banking company. See, that's interesting. They've got about $37 billion.
The shoes are even more ugly. Whoa, some of these shoes are bad. Oh, these are the sale ones. Yeah, that makes sense.
So they've got about $37 billion in assets under management, L. Carterton. They have got a pre-existing relationship with LVMH. They kind of have a long-standing partnership as well with LVMH. So perhaps that is a good suitor for it. Perhaps that is a business that then says, you know what, we will take it off your hands outright. It means we get a small piece of whatever, and we get to own it.
And now I'm starting to think, I mean, there are family offices out there for whom, $1 billion, because there's the whole private equity thing or unlisted is alternatives. That's what they call it. Is partly as a response to shrinking markets. We always look at the JSE and it shrunk. Equity markets the world over have shrunk in the last 20 years or more. Maybe a private equity, a family office. Not my family office.
And the family offices have been kind of looking for good assets to buy up over the last little bit of time as well. L. Carterton owns Birkenstock. So they're a private equity house that specializes in fashion, but one of the assets they own is Birkenstock. So perhaps that is a good play. From a private equity perspective, I suppose then, I don't know, for me, if you're buying revenue and Marc Jacobs is performing exceptionally well, then it makes sense. So in the private equity space, it's kind of three things that you're looking for, right? It's good revenues, good cash flows, or you're looking for a footprint if you're looking to do other things in that space. So that could be quite interesting. But we'll keep an eye on that. I think we need to wrap things up with other data that is coming up this week, because there's a lot of that as well. PCE data out of the US, personal consumption expenditure data. That is their preferred measure of inflation beyond the normal CPI data. That will likely give rise to whether or not we get rate cuts and those conversations.
FOMC on Wednesday.
That's it. FOMC is happening this Wednesday. Unlikely we'll see an interest rate decision, but I want to tie in FOMC with South Africa. We have our central bank decision on Thursday, the 31st. Weird to have it on the very last day of the month, but we have our own central bank decision this week. We have FOMC on Wednesday, and we've spoken about this in the past, about the South African Reserve Bank not wanting that interest rate differential to widen too much between the US. We are at a weird point now where the US could potentially hold and we could potentially need to cut.
And that's what happened at the last
That's what happened in the last one. But at the same time, I feel like we might not get a cut. And I know we don't want to hear that.
I don't know how we can't not have a cut. I mean, Nick Kunze, who's
who's much smarter than you and I.
I was going to say,
much smarter, world smarter.
We don't invite him here because it would embarrass us. he tweeted last week when we got our 3% inflation for June, and he was like, "It's starting to look like a policy error." The defense is just starting to look like really like this is just a mess.
So Nick believes it's a policy error. I see it as exactly what the central bank wants. Remember, if we're looking to reduce the inflation targeting band from 3 to 6% down to 2 to 4%, thereby anchoring inflation from a midpoint of 4.5 down to a midpoint of 3, that 1.5% move is a lot. And it'll be the first time it has ever happened in South Africa. And this is the first time since I can remember, since the 2008 financial crisis, that inflation has been this low in South Africa. So the central bank could be sitting there and saying, there's never going to be a more opportune time
Sure.
to implement this. And that means we hold off with another rate cut.
But here's the thing. So inflation is down 460 points from its peak in August of 2022, 7.6 down to 3. Our prime is down 100 points. I get your argument, and I get the risks around it, and people like Casey Sprague from Anchor are very, very concerned around the risks, and I get that. I just think 460 versus 100, that gap is a little bit large. I do suspect. I mean, and I know what is, but and I also think it's a slightly different story almost. So here's a scenario: we change our inflation target to 3%. Cool, and that, by all accounts, that's what everyone is expecting. Probably the midterm budget policy statement in October.
Yeah.
We change it to 3%, and then inflation, which as expected goes up to 4.5 towards the end of the year, and we now have to push interest rates higher to manage inflation. Well, let's get ahead of that curve by having a 100-point cut at this week's MPC. So now that we've cut 200 points, so when inflation does go above the 3% target, we've got some wiggle room to maybe push it higher. Yes, sir.
Can we take the 100 basis points out of the premium that sits between the central bank and the commercial banks?
Oh,
I mean,
now you're cooking. Well, actually, I'm going to argue.
Because then technically it affects the market less.
I'm going to argue 100 from each. But yes.
100 from each? That's brave.
Because what you're saying is they charge a 350-point margin above the repo rate,
So
and they have
bring
done that
down to a 250.
So you want to
margin.
notice two things. Firstly, they have done that since time immemorial. When inflation was 18% or whatever it was way back in the day, that's what they did. How much did our inflation get to? My data does go that far back. 1986 inflation was 20.7, and they were charging 3.5. Secondly, a little bit of collusion, maybe. Like where's our anti-collusion people?
Well, they sit within the Prudential Authority, I think, perhaps. I don't know.
They should sit with the Competition Commission people. I don't
Yeah,
know.
but central banks are governed by commercial banks are governed by the SARB, which then is enforced through the Prudential Authority. But yes, that is going to be our suggestion to Malumile Sechakhanyago, is that it's fine if you don't want to cut the prime lending rate to South Africans and you want to leave that unchanged, but then cut the repo rate, the lending to the banks, cut that part of it down, narrow that gap, and still provide relief to consumers without spooking the market. Because I suppose if you then cut, it achieves the same result. It gives consumers 100 basis points less in interest to worry about. But what it also then does is it reaffirms that consumers have more wiggle room, because later, when you start to cut on the prime side of it, you've already cut on the repo side of it, and that's had a positive effect on the market. Because on the repo side of it, realistically, the only people that are going to feel that pain is the banks, who are well capitalized and don't really need the extra 100 basis points, if we're honest.
Correct, Amando.
There we go. That's going to be our suggestion. That's going to be where we leave Market Matters, folks. Thanks for tuning in. Thanks for jumping onto the lives and for chatting with us. We are going to dive into the US-South Africa relationship in the context of the fact that a congressman in the United States, I'm just trying to remember the gentleman's name, and I'll have it for you shortly, has put together a bill to potentially sanction some South African individuals. That bill has gone through, it goes through 3 layers. It's gone through kind of the first layer. It was put together by a Republican, Ronnie Jackson. He's put forward that bill known as the Bilateral Relations Review Act of 2025 to review the relationship between South Africa and the United States and potentially introduce sanctions against certain individuals. That's going to be our deep dive. We're going to be looking at that, and we're going to be looking at what it could potentially mean for South Africa, not just for specific individuals mentioned in that. So that's going to be out later in the week. Hope you look forward to that. And we thank you once again for joining us for Market Matters.